All right, thank you so much for staying with Daybreak. It's Bulls and Bears, so we try and find out how the cash flow is in your pocket, how businesses are doing, how your jobs are doing, because most people have lost their jobs during this COVID-19 pandemic. But how are they surviving out there? It's not all doom and gloom, but yes, there are some situations that are not looking too good. So let's start from Nakuru, where Marianne Nyambura is standing by with some traders there to find out how the situation has been for them. Marianne, good morning. It's good to see you. How's the situation like in Nakuru, especially when it comes to business?
Well, Trevor, indeed, since the pandemic began, we saw activities here come to a halt. Most of the businesses were not operating, but 3 months into the pandemic, we saw activities go back to normal. But the main issue has been on financing. Remember that when it came to that, digital lenders as well as the banks failed to provide loans to them. So I'll just be speaking to some of the businessmen here in Nakuru who will just tell us more about financing, which has been a critical issue for them. Perhaps, labda uanze na jina lako tafadhali, uweze kutueleza pengine biashara iko vipi kwa sasa ukilinganisha na vile ilikuwa hapo awali, na pia vile utuambie kuhusu maneno ya financing. How do you finance your business? How do you manage? How are you keeping afloat right now?
Kwa majina yangu ni Johnson Maina Gatere, mwekezaji wa biashara mjini Nakuru na chairman wa Mitumba Association of Kenya, Nakuru chapter. Na tuna changamoto mingi sana kuanzia for the last 3-4 months. It's been very challenging because, as you know, wakati unafanya biashara normally the banks always want kama they want to give you loans, lazima ukuwe account yako ina perform, and the performance means that you have to be depositing every day. And even one of the requirements when you're accessing loans is that you have to have 3 months at least an active account. But for the last 3 months, you find that even in our own accounts we rarely deposit because we don't have stocks, there is no business, and it's even downlight. It's very hard for all of us. Yeah.
So how are you keeping afloat? Unapata loan pengine wapi? Because I know that to stay afloat that you need to get loans here and there. So how is that like for you, and unatoa wapi?
Yeah. Currently what you're just doing is if you have anything that you can be able to sell, we are trying to sell whatever we have. Maybe some of the properties that you have, because you have to finance business. Because currently accessing a loan is very, very hard, because to give the bank a guarantee, it's very hard. And again, even to service the same loan, it's very hard, because like currently in our own sector, in the Mituma sector, for the last 4 months we've not been having any supplies, and any business without supplies it cannot survive. So it's been very, very hard. We've not been able to access anything. Actually, we are almost living from hand to mouth. Even our small traders, the ones we supply to, the ones that deal with the circles, the table bankings, it's even very hard for them to even finance each other, because all of them, they are not making it in a way.
You touched on a crucial bit on servicing of the loans. Pengine uweze kutueleza how are you managing that right now, and what are the banks telling you now that the pandemic is here with us? It's been 3 months since they said that they will stop. You will stop servicing loans for a while. But what do you have to say in regards to that?
Initially what happened there was a reprieve that the banks gave us that we will not be servicing loan for 3 months. But from the 3 months were from March, April, and June, and those were very hard months. But after that, even servicing what is remaining, it becomes extremely hard. So we are even trying to find an amicable way with the banks. But even if you look at the pages of the newspaper, you'll find that the last pages for the auctioneers, there are very many things that are being auctioned from our people because they are no longer able to service those loans. Sure.
Thank you. Well, Trevor, you had that servicing of loans is quite hard for them, but I'll also be joined by another business man in the hotel industry, which has also been greatly affected. Perhaps, how is business like for you, and how are you able to finance yourself during this time? We know that CS Mutahi Kagwe had ordered that all hotels close for a while, but then after there were rules and regulations that were put in place. Perhaps, how are you able to finance yourself right now?
My name is Stephen Kuria Mururi, and I'm a businessman in this town, and I also own a hotel in Nakuru. At the moment, I would like to say that we are not paying our loans. We are in default, and we have not been able to service our loans since April, because that is when our businesses were closed down. Even when we came back, some of the conditions that have been put in place have been so difficult to maybe comply with. So our banks are constantly telling us to pay the loans that are in default, or else we are going to be auctioned. So that is the current position for the hotel businesses in this town. Yeah.
And how are you being able to stay afloat at the moment because operations are ongoing right now? So how are you keeping yourself afloat? Are you living hand to mouth, or how is the situation like?
At the moment, the volume of our sales are very low. Businesses have been greatly affected, one, by COVID-19 situation in the country, and two, by the relocation of the matatus, the markets from town. So what we are doing at the moment, we have cut our cost. Our employees, 70% of my employees, for example, are at home, and also we are also trying to restructure our businesses to see how we can be able to fit in this difficult situation, because currently our sales are very low, so we don't have much to say when it comes to sales, because there's no money at all in this town. We are only living hand to mouth. We are only getting sales up to 10% of what we used to make previously. So that is the current situation.
And possibly you could also tell us about their digital lending apps that are there in the country. Perhaps have you tried to look into that, or how are you going about the day-to-day business?
Our businesses cannot fit into that digital platform at the moment because Nakuru, as you know it, is a very small economy, and that cannot really help us, because it would have been beneficial if we would have the outside catering, which has been banned at the moment, because we are not doing weddings, we are not doing funerals, catering, we are not doing, there's no social gathering in this Republic of Kenya at the moment. So it is not, it cannot really come in handy for our businesses.
Well, Trevor, as you had those two businessmen just giving an update on what exactly is ongoing, them saying that financing has been quite a crucial impact, has had an impact on their businesses. Reason being the banks are not lending them any money, as well as the digital lending apps, but they are just living from hand to mouth, and that is the situation at the moment in regards to financing in the business industry.
That's Marianne Nyambura speaking to us live from Nakuru, just painting a picture there of how business people are surviving. And joining me now online to further this discussion is one Reginald Katzutu, who's the capital economist Amara, and also Samuel Karanja, the CEO, Kenya Importers Small Scale Traders Association. Samuel, I'll start with you this morning, just to give us a pulse of how your people are surviving right now. How are the small scale traders surviving, and what is the situation like on the ground?
Thank you, Trevor. Good morning. Thank you for having me. Now, as you have heard, traders in Nakuru, and that's the same sentiments which are being expressed everywhere else. And even our members are, expressing the same sentiments. There is no cash flow. The business is down. And you remember we had the governor of Central Bank talking about 75% of all the small traders may collapse, and we are seeing the collapse of SMEs. There are some which have been resilient, but some of them cannot hold to what is happening right now because of there's no cash flow, there's no funding that has been happening even from the government. And you remember the government has received funding from even the World Bank, even the European Union. I think they gave about 111 million euros, which was supposed to be injected directly to the SME, and we cannot see that money, we cannot feel that money. And you remember also the governor talked about the government giving credit guarantees to the small medium entrepreneurs, and they have not been able to come up with proper structures and systems on how to do that. That means that if the SME entrepreneur is not able to pay, the government stands in for them to pay for any defaulters. But having said that, I think the government has not been deliberate enough to help the SME. I do not know what they are thinking. I don't know what's their rationale behind not them being able to dispense money to the SMEs.
Reginald, let me bring you in on this. So we know there were credit guarantees given out by government for SMEs, and yet we are seeing SMEs being auctioned. Help me make sense of this. Where are we losing this nuts and bolts of it?
Trevor, I think that the main problem that we have is misdiagnosis of the situation that COVID was going to cause to the economy. One misdiagnosis was that COVID was going to create a liquidity crisis, and that's why central bank reduced the cash reserve ratio and flooded banks with a lot of funding. The problem that came with COVID was supply chain disruption, and also now the element of employment. So if you combine those two, you come up with an income crisis in the country. When you have an income crisis, even if you give loans to the SMEs, and if you look at money flow, you talked about cash flow. How money flow works is that I get paid a wage or a salary, or I get income. That income is either saved, consumed, or invested. If there is no income coming in, you realize there will be no saving, there will be no investing, and there's no consumption. So a bank sits and looks at an SME and says, okay, I have this money, I can give you a loan. But the problem is there's no person who's going to buy from you because people's incomes have suffered. People have lost jobs. So we have an income crisis in the economy which affects consumption. And when consumption is affected, you aggregate demand in the economy gets affected. So you realize the reason why banks would not lend to the SME sector or lend to even the private sector itself is, number one, they're saying, okay, there's no inflow that is going to come into your business in the next 6-7 months for you to be able to repay this loan. So do we then have a situation where we have risk, where we have to restructure the loan again, considering we've already restructured? And I mentioned it earlier that the situation that caused banks to restructure loans has not gone away. So it would be foolhardy for a bank to go and lend again, and the situation that made someone come for a restructuring of a loan is still persistent in their business. So the government needs to address the real challenge the economy is having, which is an income crisis. How do you get people earning income again so that drives consumption and aggregate demands goes up? I believe on this show earlier I also mentioned that the government needs to come and play the role of aggregate demand so that you support SMEs. So if the government is saying we are going to buy the unga and distribute it somehow, somewhere, it is better than saying I'm going to give everyone a spend it of 20,000. So if you look at the people that got even the benefit of the PAYE reduction, most of it did not go into consumption, it went immediately into saving, and the banks who are holding these savings are not translating the savings to the SME sector because of the risk of no demand coming in there. So I think the government needs to change tact and change roles and play the role of aggregate demand if you're actually going to start seeing SMEs picking up again.
Okay, we'll talk about the liquidity crisis in just a bit, but Karanja, now you see the thing is there was a recent ban on sale of alcohol in eateries. Are we shooting ourselves in the foot, exacerbating an already bad situation, making it worse?
I really don't know the rationale behind the banning of alcohol, because you find that the alcohol industry employs over 300,000 people. And when you look at the mannerism or the manners of Kenyans when it comes to the social structure of this country, people are still going to the hotels and taking tea. And so as much as we are saying that there was lack of control from the people in terms of not being able to keep the social distancing and keep, you know, the estimated or what was preferred by the MOH, I think we are shooting ourselves in the foot, as you have rightfully said, because we must think through on the impact of what is supposed to be done, because I think the owners of the bars and the restaurants are able to keep the social distancing and also able to control the environment. But having said that, we go ahead and push through policies which do not necessarily facilitate SMEs, and you find that there's a loss of, you know, revenue. There's also a loss of employment. And as my colleague has said there, you find that the moment you lay off about 300,000 people, the social and economic impact is unprecedented. And I think the government should be able to be thinking through, not haphazardly rushing into policies and implementations and doing things which have not been sought well and being thought through. And I think the government has always had the problem of not consulting. And when you do not consult the stakeholders, you make wrong decisions. You do not just wake up in the morning and say that you have closed all the restaurants, you have closed all the liquor outlets, and there are so many people who are dependent on that.
All right, and Reginald, now you were speaking about cash flow earlier on, and my question is, it's not everyone who doesn't have the money. We've seen now that during this COVID-19 pandemic, there's a select few who have really cashed in and are making millions, if not billions of shillings. How does having a lot of money for a select few affect the general economy of an entire country?
That affects the economy in the element that you now have what we call inequality in terms of the economy, and our economic growth in the previous years, even from Kibaki straight to Uhuru, was not an all-inclusive growth. It was a growth where a few people benefited, a few people actually became rich and became millionaires, whilst the rest ended up remaining in poverty. So as a country, if we don't know how to translate growth in the real sector into income in the masses, then people will remain in poverty. What happens in such a situation where now only a few people are making money, and as we all know, most of this money is not being made in the proper way, is that it is not translated back into investment in the economy, because these are people that are hoarding their funds and their money. They will not go out and consume, because even if one person is 1 billion, they still eat a loaf of bread. They will not say, because I have 1 billion, I'm going to buy 10 loaves of bread. So you realize the velocity of that money drastically reduces. This person is driving a car. They will not buy 40 cars to say, I need 40 cars, so I have 1 billion, I'm going to buy 40 cars. So when you have wealth concentrated in the hands of the few, you realize impact on the economy becomes very low, because velocity of money or the usage of that money drastically reduces. So a baker is only still able to sell 1 loaf of bread, instead of, if that income was distributed evenly around the population, he will have been able to sell 20-30 loaves of bread. He makes more income, pays more workers, and then the flow and the cycle of the cash flow in the economy now continues to actually move, and you now see real economic growth going forward. So wealth in the hands of a few equals to stagnation in economic growth.
So let me bring in Karanja on this. Karanja, tell me, what would you like to see as Small-Scale Traders Association and also importers? How can this be made better? Because the government says they've made concessions in terms of taxes, but that is assuming you have a job to begin with so that you have a tax relief. They say that they've pumped in a lot of money in terms of the stimulus package. The banks are not guaranteeing it, they're not giving you loans. What then would you like to see from this point on to make the lives of your people easier?
Trevor, the people that I represent are people who have, what to do. And when I mean that, I say that they have things that they get from China and they sell. And there's a lot of market for those things. But you see, the problem is that you find that, for example, if you bring electronics and ketrali, viatu, all those mari things for people to buy, you find that, like what my colleague is saying, there is no cash flow from people even to be able to purchase. And you see, cash flow should be well thought through, especially from the structure, the economic, social, structures. I have a problem with like what the government is doing with the 10 billion shillings that they say that they are going to, I think, Kazi Mtaani. And Kazi Mtaani is just cleaning. I was driving, I think, a long way from Nakuru to Nairobi, and I saw young people just sitting down idly, wanakatakata nyasi, then they get 500 shillings every day. If the same individual, you give them an amount of money that they can be able to venture into agribusiness, you see, agribusiness, because that is an area whereby it has been underused, agribusiness, and because they are from the countryside, they can be able, and they have small shambas that they can be able to bring in and cultivate food and sell that food to Nairobi. Because when you look at the shooting of prices of goods in Marikiti, is because there's shortage of food. And you find that the government should be able to open up and see and consult with people on what they're supposed to do. And so what you like to see is not even the government coming to do credit guarantees, is government being able to dispense their resources in the rightful or to the rightful channels. And the rightful channels is helping the common mwananchi to come up even with inventive ideas. Let me give an example. There are people who right now they don't want to go to China, but they want to start, like one of us is starting a company of bulbs. But him getting the licenses of, having that company being approved by KEBS and NEMA and the rest, it's a nightmare. It's a process that you don't want to go through. So where is the facilitation? This man wants to come here and set a small base to create, to make bulbs and employ about 15 people. And so these are some of the things that the government is now supposed to inject their energy to, because we do not want, again, to be over-dependent on China, but we want now to come up with our own inventions. We know what we can be able to make. We know the capacities of things that we can be able to make here. And let me tell you, Trevor, whether we like it or not, life is going on. You are lighting up your bulb. Your bulb is going to burn at some point, so you have to buy your bulb. So there are things which they have to happen. You have to eat on a daily basis. So you have to eat bread. You have to eat unga. So the millers have to mill and the bakers have to bake. But now, as the millers have to mill and the bakers have to bake, we must facilitate those people in terms of making sure that they have cash flows, even from the banking sector. You find that the banks do not really want to venture into giving the loans based on, like what you're saying. My colleague is saying that they are not going to be able to pay. Yeah. But you have to see the potential of the business that you want to inject money in. And the potential is there. They are potent of growth, but if you cannot give them that financing, they cannot grow. And so what you like to see is the government being able to facilitate policies and avenues to which, for example, if I want to come and become a local manufacturer, let there be no bureaucracies and processes which do not make sense.
Karanja, I wonder what you mean by bureaucracy, because I remember when there was a standoff in the ports and there was a backlog of containers, you were in State House and you met the president. So how then are you saying that there's very little consultation? What goes on between the time that you meet the president and the time that they're supposed to effect the decisions or the recommendations that you made? Is there a bureaucratic chain in between the state and the people down there, or what is the issue in between here?
You see, Trevor, when we went to see the president, we had made a lot of noise, and you remember we had staged a very big, a very huge standoff with the government, and that's why we were called by the president. And you remember even the president stepped in and said that, those bureaucracies which are there, as you have rightfully said, in the port, because you find that in the port we had the DCI, what we call the multi-agencies. We had the DCI, we had the Anti-Counterfeit Authority, we had KEBS, we had NEMA, we had Poisons and Something Board. We had like 24 agencies seeking to clear one cargo. And so each and every agency wants to step in their authority. And so for you to clear that cargo is going to take over 21 days to do that. And so that's the bureaucracy I'm talking about. Why can't you make lean, effective processes which do not compromise the process of clearing, and yet also don't compromise what is being brought in, but they are lean? Because these agencies, is an overload, and that's not even an overlap of what they do, because you find that what anti-counterfeit is supposed to do is what maybe KEBS also has a department which is doing the same. So being able to look at duplication of processes which are not supposed to be there, and each and every process requires money, and that's where now corruption comes in, because some of them are going to ask you for money. And you remember the other day we had issues even with Kenya Bureau of Standards of what's happening there. So these bureaucracies do not make sense. Let me give an example. For example, if I need a standard mark from Kenya Bureau of Standards, why should I wait for 59 days? Why should I wait for 59 days? If I need a standard mark of a product, I take the product to Kenya Bureau of Standards, I fill in the forms, I pay the money that I'm supposed to pay, and actually even that money is also very expensive. Then I'm told that process will take 59 days. The 59 days, I don't understand why the 59 days, and there are people who are working there, there are people who are working in their laboratories, and it does not take 59 days to test a bulb. You see, it doesn't take 59 days to test a bulb. It doesn't take 59 days to test sugar or even flour. So when you look at those bureaucracies, they are bottlenecked processes which are archaic. They were using it long time ago, but they cannot be used in this time. And so what I think is that these bureaucracies must be cut off, so that if I'm asking for a standard mark, I'm given a maximum of 1 week, then I get the standard mark, then I'm advised by the agency on how I'm supposed to improve on my product, or my product is given a clean bill of health, and I'm able also to be able to go and produce. The other thing, Trevor, I would like to say is about very fast special economic zones. You remember the government started special economic zones. Special economic zones is a zone whereby the government gives very good incentive environment, incentives in an environment which is controlled. You are given incentives in terms of power, you are given incentives in terms of infrastructure, and you are able to produce your goods, with the minimum production cost, because the government has stepped in to make sure that you produce your goods very fast and in a good environment, and also lean from all those agencies. These special economic zones, they started, they are nowhere now. And so when you're talking about local production, and when you're talking about building, buying Kenya, building Kenya, we speak one way and we act in a very different way. So at the moment we do that, we are not very serious of what we are saying. And actually, when you say you want to ban mitumba, like for example, my brother in Nakuru is a chairman of mitumba, you are banning mitumba so that we can buy Kenyan products. The Kenyan products have no capacity to feed the market. And that is why I usually say that you don't kill a sector to build a sector, but you make sure a sector has been facilitated and built from point A to point B. Give a market share of 60 or 70% to the local manufacturers, EPZs and the rest, and give 30% to Mitumba, and tell them in the next 5 years, we are lessening your importation as we are building the capacity of the Kenyan production cost, so that when you look at that, whatever we are bringing in from outside can be compensated on whatever is being manufactured here. But whatever manufactured here is too expensive even for a local person to be able to afford. And so all that, Trevor, it brings a lot of confusion in terms of the market and also the SMEs.
Okay, very well explained there, Karanja. But Reginald, let me bring you in on this conversation again now. Are you seeing some level of disconnect between policymakers and the actual people who do the trades down there? And we are watching the cookie crumble in the yard right now in terms of economics. From an economic perspective, what are the stopgap measures, and how then do we resuscitate our economy going forward?
Let me pick up from where Samuel left, and there's a statement that he mentioned about the ability for us to manufacture some of these things locally. 90% of our SME is an importing and reselling SME, and that's not how you grow an economy. And the reason why we've reached there is because it's the easier way of doing business. So if you take example, the type of SMEs that you need to start building, you start building SMEs that are around your natural endowments, and Kenya has good weather, good soil, and can produce quite a lot of things. So I would rather the government puts money in a tractor assembly plant or plow manufacturing business, SME, where the people actually live, instead of putting a Volvo assembly plant in Nairobi, because that only caters for the very few people that can actually afford the Volvos. So if government policy starts going back and say, guys, 50% of our economy is dependent on agriculture, so why are we not producing our own fertilizer? So if a farmer in Murang'a or in Kericho or wherever they are in Mombasa says, I'm producing maize and I need plows, so an SME comes now around and says, I will manufacture plows. So around that SME, someone say, okay, I will make sure that I do the sticks or the poles. Someone who does the metalwork will do the blades and all. You realize that now develops to say, okay, we need to be able to assemble combined harvesters. You get an SME around that sector again, and you realize as agricultural sector continues to grow or grows fast, the capital needed there starts reducing, or the demand of capital there starts reducing. So they start becoming capital surplus. That surplus now starts feeding into the manufacturing sector. Then you find yourself in a situation where you don't need to borrow much from the outside, because you have a sector that is generating surplus capital. And as the agricultural sector generates surplus capital, you find naturally, because of the banking system, the structure it is, the other sectors also start getting funds, because banks start channeling funds to these other sectors. It is a bit risky to expect banks to fund SMEs, because of the riskiness of that. As much as they might look at potential, we need to understand that for banks, it's not their money. Someone can come and demand their money back. So there's always a mismatch between how the period banks get money. So in terms of funding, it's normally short-term funding. SMEs don't need short-term funding; they need long-term funding for them to be able to grow. So because of that mismatch, it becomes very hard for banks to supply funds to SMEs. What is missing in the Kenyan economy right now is the role of private equity and venture capitalists. So these few rich billionaires who are hoarding their money are actually supposed to play that role of actually supporting startups. And banks will come in with working capital and all, but you'll rarely find a bank supporting a startup. You have other financial intermediaries who collect savings, who are supposed to disseminate that savings. So you have insurance companies, you have pension funds, you have your collective investment schemes, and all these circles. The purpose of them getting these funds was they're aggregating savings so that they can give to the guys who have deficit in saving. But then we have a government who is running high capital projects and are always running huge deficits. So the government becomes the largest demander of loanable funds. So you reduce CRR and you flood the banks with a lot of money, and the banks channel back that money back to the government. Pension funds, close to 80% of their funds are in government securities. Insurance companies, close to 80% of their funds as well are in government securities. So if the government is going to absorb all these funds, then they need to set up institutions like Agricultural Development Finance, AFC, ICDC, to be now those institutions that fund the startups. The government can then give a guarantee to those institutions instead of working with commercial banks to try and fund SMEs. So if we cannot strengthen these government institutions for AFC to fund agriculture, and not just to fund members of parliament, but just to fund agriculture, to fund those SMEs that are around agriculture, to fund people purchasing cows, processing hides, and the government can give a guarantee to such an institution instead of giving guarantees to commercial banks. Because the job of commercial banks, because they have to match the source of funding and the giving of funding, and because of that mismatch, they will actually not give money to SMEs. So I think for us to kickstart our economy is to actually step back and say, let's re-strategize our economic trajectory. We cannot go back to where we were. Let's look at what we are naturally endowed around. Let's build industry around those things, and those industries should not operate from Nairobi, but operate from where people are actually living and where those things are needed. You get capital surplus from the agricultural sector that funds now your manufacturing, and the rest reduces government deficit, and government stops being the largest borrower in the economy.
All right. Karanja, final remarks on this situation now. How best do we help the people who you're dealing with now?
You know, my colleague has said it, you know, in the best way possible. That was fantastic, because we cannot do the same thing and expect different results. And so we have to reinvent our own trajectory and say that you're going to do things differently. And as you have said, the government has been competing with the SMEs in terms of getting loans from the banking, and also taking that money back, because it's easier and safer for the government to get money from the bank and circulate that money. And it's also safer for the banking sector to even lend to the government itself. And so it is a high time that the government is able to put in and inject money, because they have different avenues and also donors who can even be like AFC, like what my colleague is saying, and we are able to inject money in the agricultural sector, even for startups. And you find that many times we have money that is floating, that is being given by some donors, and it has to pass through even the banking sector. And because we have different government agencies which are supposed to take care of that money and inject it to where it's supposed to be injected. The government hoards that money, and when they hoard that money, we don't have the cash flows that we are supposed to have, and don't have the help that you're supposed to have. And I'm thinking that if we are able to do like what my colleague has said, as the government, make sure that our agencies, make sure that like AFC and the rest of the government agencies are able to reach out to the common mwananchi and help them come with local manufacturing, I think we are going to go a long way. And what you are saying about the SME is going to be a long gone scenario.
All right. Thank you so much for speaking to us this morning. That's Reginald Kadzutu, capital economist with Zamara, and also Samuel Karanja, CEO, Kenya Importers and Small Scale Traders Association. There's a bit of feedback coming through here. Abdullah Bash says, this is on the earlier conversation, he says MCAs are in bed with governors for contracts and other money gains. If they don't get what they want, they start running around saying that the governors aren't working as required. Many of them are clueless. MCAs need to be serious with their role as legislators and oversight. Jacob Abere Matlala says, listening to conversations about COVID-19 preparedness around the country, and case in point is Nyandarua and also Kirinyaga counties, and now conclude say that county assemblies have personal vendetta against governors. But generally, when you're speaking about trade, you say that there's still a lot that the government needs to do to ensure that people survive out there.